Okay, you guys, we're now going to work exercise 413 on page 211. We're going to prepare a statement of cash flows using the direct method. We did not use that one in managerial accounting. We're going to take a look at it here. It's just a different format. We're required by generally accepted accounting principles to show the operating section of the statement of cash flows using the indirect method. Meaning we start with net income and make some adjustments to come to net cash flow from operating activities. But a lot of companies will show the direct method, and then just below that they'll show that reconciliation of net income to net cash flow from operating activities in the same document. So we're going to look at the direct method. You're going to be able to tell here that it's a little more difficult to calculate the operating section anyway. To use the direct method, they just give you all the amounts here, but a lot of work can go into getting these numbers. For instance, let's read through it. The following summary transactions occurred during 2016 for Bluebonnet Bakers. Bluebonnet, easy for me to say. Okay, we've got cash received from customers. You guys, there's not just a number in our financial accounting records that's cash received from customers. What we would have to do is look for credits to cash that were credits to sales that were cash sales, maybe debits to cash that were cash sales. We'd also have to look at probably credits to accounts receivable. That would be cash received from customers. Total all those up. So you can see there's quite a bit of work that can go into the direct method. They just kind of completed that part for us here. And we're just going to prepare the statements using the numbers they've given us. Okay, so we'll start out with a heading. It's going to be Bluebonnet Bakers. Statement of cash flows, and this will be for the I don't know, for the year ended. I guess we'll use the calendar year. I don't see where they told us that. Okay. For the year ended December 31, 2016. I guess we assume the calendar year. Alright, now our first section on the statement of cash flows, it doesn't change. It's still cash flows from operating activities. Alright, we're going to look first for cash coming in from operating the business, or cash going out to operate the business. Now when we say operate the business, we mean cash coming in from normal operations or cash going out for normal operations. Things like interest expense or interest revenue would be included here. We would also include cash received from customers, cash paid to suppliers, those types of things. Cash coming in or going out in normal operations of the business. Okay, so one thing I see, we got cash received from customers. They called that collections from customers. That would be fine. $380,000. Interest on a note receivable. That's an inflow as well. We'll call that interest on note receivable, a positive $6,000. All right, I'm just going down the list in your book. Principal on note receivable, that's going to be considered an investing activity. Cash coming in. A note receivable is really an investment. The interest earned on the note or interest paid on a note payable would be an operating activity, but principal payments from someone we made a loan to, which is essentially an investment, those principal payments would be an inflow in the investing section, and principal payments on notes payable or debt we've incurred would be an outflow in the financing section, or borrowings recognized by a note payable would be a cash inflow in the financing section. Okay, so principal on note payable, we'll pick that up in the investing section. Sale of investments would also be picked up in the investing section. Proceeds of note payable would be a financing activity. All right, so now let's look for outflows under cash paid for inventory. Okay, that's going to be operations. Selling inventory is part of our normal operations. So we'll put purchase of inventory, and that's a negative 160. Remember, that's cash going out. This is probably going to seem easier to you guys because they're giving you the numbers here. If you have to actually work to get the information together, come up with those numbers, it becomes quite a bit more difficult and time consuming. Okay, interest on a note payable, we've taken care of that one already. Or excuse me, that is an operating activity. Interest is always, we took care of the interest on note receivable. We haven't taken care of interest on note payable yet. And interest is always an operating activity. It's going to be a negative 5,000. Purchase of equipment would be considered an investment. Any property, plant, or equipment sales or purchases would be handled in the investing section. Salaries to employees, there's an operating activity, 90,000. Principal on a note payable is financing, and payment of dividends to shareholders is also financing. So let's total up the operating section. We get net cash flows from operating activities, $131,000. Okay, let's go to the investing section. Cash flows from investing activities. All right, I'm going to mark off the ones we've already used. So I'll start back with cash coming in. I'm looking at principal on note receivable. Remember, a note receivable, we're really loaning money to some third party. So that's an investment for us. Principal received on that investment would be an investing activity. It's a cash inflow of $50,000. Collection of note receivable, $50,000. Sale of investments is also an investing activity. That's cash coming in, $30,000. See if we have any cash going out for investments. I believe we did. Purchase of equipment. It's a negative $85,000. And we'll total all those up to get net cash flow from investing activities, a negative $5,000. Net cash flows from financing activities. Okay, here we want to look for cash coming in or going out as a result of financing. I'm looking through the cash received. We've already taken care of customers and interest. Proceeds from a note payable, that's cash coming in, $100,000. We also have payment on a note payable, $25,000. That's cash going out. And payment of dividends is a financing activity. It's cash going out, $20,000. Total those up, we get net cash flow from financing activities, a positive $55,000. Let's talk about this for a second. You always want to see a positive net cash flow from operating activities. If not, then we're losing cash by operating the business. That's a really bad warning sign that the business may be on the way out. So you always want to see a positive number here. A negative number here is really no big deal. What did we do? The big negative here that caused that is purchasing equipment. We're purchasing equipment of hopes of earning more revenue and bringing in more cash in the future. So making some investments causes cash to go out, but we're hoping those investments earn us more revenue or cash in the future, like we said. So a negative number here is really not a big deal. In the financing section, you'd really rather see a negative number. That means we're paying off debt or paying dividends, return of the profits back to the shareholders. If you got a big positive number here, that means we're either borrowing money, issuing new shares of stock, or issuing corporate bonds. And that means we were short on cash and had to do something to cause an inflow. So you'd really rather see a negative number here, probably. Negative here is not cause for concern. A negative here means the business is probably on the way out. Really bad warning sign anyway. All right, now we'll total those three. We get a net increase in cash of $181,000. We're going to add that to the balance of cash and cash equivalents at the beginning of 2016, which was $17,000. And that's going to give us cash and cash equivalents on December 31, $198,000. Okay, you guys, for a lot of you, that's probably the first time you've seen a statement of cash flows prepared using the direct method. Now, if you're doing this in real life, you'd also want to show this operating section using the indirect method, and we could drop down and do that below here. But we're about to see a statement of cash flows worked out using the indirect method, so I'll let you see it there. Okay, you guys, that should help you with exercise 413. Thanks a lot.